Having a adequate account management process is going to be the key to your success. No matter how good you are when it comes to trading, analyzing, or making predictions, without having a adequate account management process, you will not do well in this world. The reason for this is because the way you manage your account is going to be influencing what you buy and how much risk you take. So in today's session, we're going to be talking about the important topic of account management and also address different scenarios where we had different level of trades and deciding what to take moving forward. We had another very successful day in our trading session, and if you guys have been following along, we have been very consistent. It is without our account management process that we're able to do this. If we did not manage our account effectively, then we could not be where we are today. So besides that, once we go over the trades, the information, the prediction that was made today, we will then discuss the details around the trades that we have taken. We will discuss the next steps moving forward, and we will also share with you on what you can do with your account management setup depending on where you are at to prepare for success. So let's get into it and let's discuss it in great detail, okay? So the first thing I want to talk about is the prediction that I made yesterday for today. I discussed a little bit about it in the video, but I really want to go over this prediction here because it's very important to understand how we analyze stuff and what actually happens in the past. So as you guys can see, this was timestamped last night after the video. I see that there's short-term selling, and this is after the PPI report. So I basically suggested that the market will still trade in range. And as per our model over here, our chop range that you guys can see is between 58.05 and 58.67. Okay, so that's pretty much what we have noticed for today. Now in our war room, this is where we give daily predictions about what's going to be happening today. We explained about what's happening in the market here. So the PPI actually drove the market to retest the top here, but there's a call wall that's pushing the market real back, and that's between 58.65 and around 58.70. Okay, so what we said here is that the call gamma is showing a large range that extends at 58.90, so that's how far it goes. Essentially, the probability ranges expect a lot of chop to happen. Okay, so the bullish gamma is at 58.60. If SPX can remain above 58.70 and hold, we're likely to see our top range. And as a matter of fact, if you look at the chart of what happened today, this is the starting of, right over here. So this is the starting of today. So we start over here, and you can pretty much see that we've been trading underneath our bullish gamma the entire trading session. And that's kind of important to highlight here, because knowing the information that we provide is going to be key. So we had this 58.65, the market's only bullish till then. The bearish gamma was 58.30, and at that point, you know, this is not meant to be any sort of support or resistance. This here is pretty much to tell you when the market is looking weak or when the market is looking strong. So you are aware. Our neutral gamma is basically the center where we see the market is in no man's land. Okay, so as suggested, we believe that there would be a lot of chop today, and we had confirmed it post the results. Now in today's trading session, we go over the TEEPS profits. You can see a lot of members did very well and managed to make a lot of money off the Tesla call out that we made yesterday. Many people have actually swung those, but as you guys can see, we waited, and we placed an order to buy ARM calls right off the bat. We still are holding our other trades as well, and basically we placed an order to buy SPX 5900 call at 1.7. Okay, so this trade was meant to be a scalp. We got the fill at the scalp. Not all the people got the fill, but some people have, and basically that went very far ahead. Okay, So that play was our first successful trade that we wanted to take 50% profits. And the thing about what I do is that I'm trading a smaller size, and I'm also basically selling a lot faster, because this is the beginning of the year where I reset my account. Every year I reset my account, so that way we can, basically grow that to new levels, and then at the end of the year we start all over. So that's the reason why I'm playing a smaller account. So we placed another order to buy more SPX calls. Eventually down the line here as well, that fills, and we placed another order to buy Nvidia calls. That did not fill. It was very close to, actually. So we got the fill at that point. So, and a lot of people definitely made money right off those. So 2 successful SPX trades by placing the limit order, and we got those fills. I always keep my team posted about the orders that we're waiting for. I placed another order to buy Tesla 425 calls at 3.5. We waited. We got the arm fill later, and that trade held all day. The whole room is going crazy about all the trades that we're hitting, because we had a lot of new members that signed up. I gave the team information about all the trade logs that we do, because it's important for us to be transparent with everyone. So we got the fill on the Tesla, filled at 3.5, and once it filled, that was another 50% play, because our standard is that whenever we drop a play, we want to make sure that it gives minimum 50%. We sold half the Tesla play, and eventually we sold a full position right at the WAP here. So when we got the bottom around here, it hit the top, we sold exactly there, and I even predicted this as well on my Twitter feed that Tesla would hit this 412 area, and then we decided to get out. Okay, and that's pretty much the perfect trades. You can see a lot of people are doing very well, and we just been hitting it pretty much all sides of the market here. And at the end of the day, actually, I pretty much want to discuss one trade that I actually was contemplating on taking, but I decided not to because of my overall account management process. So I said SPX 5830 can work as lotto at the upper WAP. I didn't want to take it because of my account management process, right? This was actually, so this is Mountain Standard Time. So this right over here is at around 2 o'clock. So right around here, this is where we basically called out this play. And at this point, if you had taken this trade went as far as $20. So from 1.8 to $20, whoever took that trade managed to do well. Now, besides all that, very successful day. Let's go over the account management process, because you guys see that I pre-announced my plays by saying I placed the order. I also showed my statements as well, and I showed the total gains to the team, so they're aware about how much capital I'm putting in. My account is totally different than everyone else's, but regardless, I still show this for transparency purposes, so that way people can learn how that works. Okay, so if we go into it right over here, this is the Excel spreadsheet that I use for account management purposes, okay? And it's essentially very important here as well to discuss, because by showing this here, we can pretty much explain to the team why we took the trade, what was the strategy behind the trade, and also did it hit our minimum 50% target, okay? That is very important to share with the team, because by sharing if the trade went above 50%, we're fulfilling our promise. So there's around 31 trades that we've taken so far, and out of those 31 trades, there's 1, 2, 3, 4, 5, 6. So far 6 that didn't hit. The ones that are blank are the trades that are not fully complete yet. But out of those 6 trades, so basically 31 trades that we did, and out of that, so that's like around 85% hit rate that you've seen here in terms of those plays. Because sometimes I let winners, I don't sell the winners, because if I have a high degree of risk, I try to aim for a higher potential, and sometimes those end up going to 0, even though they hit our minimum standard target. So if you are a small account trader, it's important that if you are in my room and you decide to take a play for whatever reason, that you sell as like between 30 to 50% because you want to build a harvest of profits so that way you can take shots and have a sufficient account to play with. So you can see a lot of green on our screen here with all these trades as well, and you can pretty much see that the only trade that we didn't really hit is over here. And the thing about that I do about my account management process here is all the trades that you see that are open here, right? So I consider those trades as a zero until it gets sold. So this open trade, for example, is zero. This open trade here is example 0. So when I sell them and declare profit, or if I sell it for a loss, then I know exactly what my P&L is going to be for the month. So if I was to pretty much lose on all my positions, what would I be left with? And that is the amount that we're looking at. So that's why this spreadsheet is very important for us to do, because at the end of the day, when I called out that 1.85830 put, I decided not to take that because I wanted to make sure that my account remained above 10,000 P&L after I took a bunch of those trades, but I still shared that trade idea as well. I had a lot of successful trades, so I was becoming more defensive over time, and that's kind of important to do here. The next thing I really want to talk about here is what you can do or should consider when it comes to trading your account. So pretty much the first step you want to do when it comes to considering how you should manage your account, in my personal opinion, is understanding how much cash you have. So let's just say you had a $10,000 account, okay? This $10,000 of your account is the lifeblood of your account. As if you run out of this cash, then you're done, okay? So the thing about trading is that your chances of success are going to be higher the longer you can remain solvent and the longer you can remain in the game. The reason for this is because there's going to be opportunities in the market that you definitely don't want to miss out. If there is news, whatever the case is, or if there's a rally, or even like, let's just say, a massive dump in the market, and it's pretty straightforward, you do not want to miss out on those opportunities because they do happen. You know, the whole COVID scenario was a great example where amateur traders that didn't even know nothing and just held their trades made thousands, and some can argue millions of dollars worth of profit. So it's important that you take that into consideration. The second thing I believe in as well when it comes to trading is that you do not treat trading as a gambling thing. It's not a get rich scheme here. It's very important to understand this, because if you treat it like a business and pay yourself constantly with these cash flows, you can do well in the long run. So those are very important to consider. Now, the next thing that you want to do out of this $10,000 account, I like to personally have a weekly budget. So this weekly budget is basically what's your max drawdown for the entire week. The reason why this is important here is because you're putting restrictions on yourself so that you do not overtrade, that you do not revenge trade, and you basically become more disciplined with how you're allocating your resources and what trades you're taking. Okay, this is very important. It's like having your own personal weekly stop loss. If you have a smaller account, you won't ever be in a situation where you blow it up because you take too many trades. So writing this on paper and declaring it right off the bat is going to be crucial for you to understand. The way that we calculate it is that you do 20% of whatever your cash balance is. So in this case, it'll be $2,000. Now, if you have under a $5,000 account, 20% is not going to be enough. So at that point, I would probably say that you probably want to do maybe 30 to 40%, and you just have to be more careful with the trades that you're taking. Okay, but anything above 10%, 100,000, then it's 20% is fine. I would say 40 to 30% is your weekly budget for accounts that are under 5,000. Okay, and based off that, I use a benchmark by dividing it by 5. Like if you were to take 5 shots, and that's what you have in your revolver, how much, basically max size per hand can you take? And in this case, it's 400. So This doesn't necessarily mean that you have to always put $400 per every trade. That's not the case, because some risk levels for SPY zero OTDs are going to be very, very risky, and you don't want to put that $400 in. But essentially, this here is your max limit that you want to put on any sort of trade. You could do $100, $50, $200, $300 $100 trades, but that's totally fine. But this here, just so you know in your mind, that if you do see a Tesla call that you really want to get into, and it's something that is slightly far out of the money, don't pay $5 for it. Wait for it to come down, or wait for a pullback, and then jump into it. So in my mentorship channel, I give the ranges. So my estimated weekly high on Tesla was 425. So you know that based on that 425, if it costs $5-6 and you want to play Tesla, that is way beyond your budget. Okay, so it's better that you wait for a pullback. That way you can essentially get in. The next thing is having goals on when you're going to be selling. Okay, so essentially I suggest that you should, when you're starting off the first phase of growing your account, keep taking profits between 30 to 50%. Okay, if you do this is going to be very helpful moving forward. Now, the crazy thing about this process here is that a lot of people ask me, what do you think about stop losses? Personally, I do not like stop losses, because when you ask someone, right, what their stop loss is, the moment they get when it comes to trading, they don't have a clue in terms of what it is. So that pretty much tells you that their defined risk is not there. If you know your stop loss, and let's just say your stop loss is $1,000, right, out of a $2,000 play, that means 50% of yours is a stop loss. So if that's the case, why not just play $1,000 hand and just work on your goals, because options are very volatile. So that's kind of one way you want to think about it as well. Sometimes the people that do stop losses, they oversize their position, and they essentially have those stop losses so they can make a large gain in a fast manner. It's important that you think about this, because I've noticed in the past the faster that account grows, the more likely you're going to see a massive downfall. So it's important to think of trading like a business, okay? And if you're in the StockX mentorship program, we try to make sure that every play that we drop gives minimum 50% return in order for it to be successful. Now, the next thing here is your weekly goal. So if this $2,000 that you make, and you make it to $2,600, so meaning that you have a $600 gain, this $600 gain that you're going to have, you're going to pay yourself, okay? It doesn't matter if you make, $5,000. If you make $5,000, what I would normally tell my students here, I tell them that you basically take that $5,000, subtract $600, so you keep $4,400 in the account and let it grow, and you keep that $600 to yourself. If you make less than $600 that week, whatever you made, just pay yourself, okay? Because you want to make sure that your trading account pays you and not you pay it. So what I mean here is that you don't want your trading account to pay. You don't want your trading account for you to put money in it, because a lot of the time people take money out of their savings accounts, their line of credits, and they constantly put in there every time they're losing. So that's not good. Your trading account should pay you. So it's important that you constantly pay yourself that $600, because that's you're going to be your goal. Okay, so paying yourself will add a lot of discipline to your trading in the long run, and that's how I've been able to trade for a living and do it full time. So I hope you guys enjoyed this video here. It was pretty much long, but watching this over here will definitely make a decision, because without following my account management routine here, I will not be able to remain calm, remain focused on all my trades. So essentially, this here is going to be the key to my success, is following this methodology, constantly paying myself, constantly making sure I have a weekly budget. Because at the end of the day, when you think of the best analogy of having a budget, it's like two countries going to war. Country A has 1 million soldiers. You don't ever see that country ever putting that 1 million soldiers in one specific battle, because There's going to be situations where they may be ambushed, they may have a disadvantage, whatever the case is. They always hold reserves. So hold reserves in your account. Make sure you're making the smart actions, because if you trade with this mindset and discipline, you're more likely to be successful in the long run. So thanks for tuning in. I'll see you guys in the next one. And like always, let's get that money.